Hello and welcome to Moneycontrol. I'm your host Nickey Mirchandani, and we are at the sidelines of Motilal Oswal Financial Services 19 Global Investor Conference out there, and in conversation with the chairman and co-founder of Motilal Oswal, Raamdeo Agrawal ji. I'm going to start off by asking you, what sense are you picking up from the conversations that you're having with the HNIs and the corporates out there for the India growth story?
Yeah. So actually, it has been very busy for last 2 days, and we must attended about 10, 12 corporate from very different segments. I mean, from manufacturing, services, exports, technology, all sorts of combination. And what I'm sensing is that, I mean, in stock market, we are already bullish. We are carrying the bullish story ourselves. But it looks that corporates are actually sounding a little more bullish than as much bullish I am. So it looks that it's mutual in the sense that it's not that we are in the air about bullishness because there is a flow and there is a market is all-time high and things like that. But they themselves are charting out huge possibilities. I mean, nobody is talking about I mean, you ask about the risk, nobody has anything which is visible. Of course, there is a risk which is not known to anybody, but it looks that it's a picture perfect, and almost all the sector guys who came, of course, they're all successful companies doing very well. They have been asked to present in the CEO track, but even their own, it looks that there's a lot of change in the industry structures and a lot of discipline in the lending and all. Banking sector is in a pink of health, NBF sector is in pink of health, hospitality sector is in great demand, hospital sector is in great demand, aviation cannot fill the seats, can't find enough planes. So I think it looks as if this 7-8% and Vande Bharat, wonderful program by government, everything runs into a few thousand crores in terms of order sizes. So I think the mood is building up. I think if we can take it forward into say 23, 24, already 6.5% kind of growth. But if by chance 24, 25 also goes to closer to 7%, 6.5% post political debate, I think it's not then the price.
Okay. So you think Indian equity markets right now still are not that expensive given the kind of optimism that is building in from the corporate side? Of course, we've seen a huge participation coming in from the retail side, and we're going to touch base on that as well, of the revolution that you think is coming in from the retail category. But overall, in terms of the valuation and the themes that you think could be the next alpha generators for the markets, your perspective?
It's not that market is cheap. No way. I mean, it is fun to buy into the markets when it is very cheap. It has been sold out like, not exactly like COVID time, but many times there is a 10-15% for some reason there is a correction because some global reasons or something. And that's a very sweet spot to buy into the market. Right now, we are sitting at all-time high, clearly. So that would definitely moderate the shorter term returns, say 1 or 2 years, 3 years. Longer term doesn't matter, 0.5% here or there. So clearly, that aspect is there. But when you hear the corporates that the kind of government is committing to capital expenditure in various sectors, particularly railways, I mean, 2.5 lakh crores per annum, like it's not one time. And when you dole out those orders of 2.5 lakh crores, you imagine, I mean, there will be only 8-10 main players to whom these kind of orders are going. So, this is a scale change, and of course there will be a below them, other suppliers are component suppliers to them. So it is going to have effect. My sense is that as we go forward and if there is no disturbance in the Indian economy, I think momentum will pick up. I mean, like Q1, Q2, Q3, Q4, as the global geopolitics also gets some kind of resolution. I mean, of course, there could be some disturbance in terms of, say, this US interest rate going up. Suddenly it goes out of hand. It rises by 100, 200 basis point or something. So those things, I don't know. I mean, like there could be chaos in the global currency markets and things like that. There could be competitive devaluations. So we don't know from where the risk will come. But right now, picture looks perfect. In fact, better than before the conference, I would say.
Okay, so you probably more optimism, which is developing post the conference.
More confidence, I would say. More optimism already we had.
Okay,
we're always optimist.
Now we're confidently optimistic.
Yeah, confidently optimistic, you can say. Yeah.
Okay, so let's talk about, divide the conversation in 3 bits, where we are first going to address the foreign institutional flows and the retail behavior. Second part, we're going to talk bit about the economy, and third about how bullish are you overall on India. But speaking about FII trend, in August thus far, we've seen India attracting the highest level of FII compared to that of emerging market, compared to that of developed economies. There is significant traction building up for FIIs. Do you see that same vigor going forward for Indian equity markets?
See, I can only look into the history. From 1993 they started coming, so this is almost 30 years of their history of very active participation in Indian markets. In 30 years, only 5 years they have sold net. During the year they could have few months they could be negative, few months they could be positive, but overall only 5 net years, I mean among 30 calendar years, there are only 5 years out of 30 they are net negative. And incidentally last year was one of them.
Right.
So if you look at the series, if you chart a series, the probability is very high that they will be buying rather than selling for next 3-4 years for sure. At least for this year definitely there are no 2 consecutive years of selling. You can never say that it will never happen, but very unlikely in the given environment and the bullishness they have. So if they are, forget about how much they will buy, I don't know, I have no idea. But they will not sell. I will be very surprised if it is net negative in the current year. So that takes care of one of the players in the market, which is very important.
Right.
Second is the retail.
Yes.
And in fact, I presented that thing, the retail equity revolution in India. And we are incidentally one of the largest retail equity guys. I mean, we cater to 98% of the pin codes in India. That's the reach of Motilal Oswal's distribution. So we are beneficiary of the retail revolution. And the size of the revolution, I can tell you, the number of demat accounts, I mean, it's just one of the, was about 40 million by 2020, and now it is 125 million, 23 million. So, and in my, some rough estimate, in next 4-5 years, it is headed for 250 million, and still it is not done. After 250 also, there is not end of the day. I mean, we could be going to 300 and 400, 500, but let's talk about what is going to happen in next 4-5 years. So I think and they don't have any choice. They have to buy only, if at all there is equity allocation, they are going to buy into India only. Foreigners have the choice whether to go to China, whether to go to Brazil or India. There is one of the markets.
Right.
They can allocate, they will allocate, say instead of 10%, maybe 12%, 13%, but they cannot. So what I'm saying is that Indian retail has no choice but to dump money here. And that makes a situation very interesting. You have the foreigners buying, you have domestics buying. Now, from where the supply will come? That's the thing. So the supplies, of course, for a given price, supply will come from the sky. Okay, markets are wonderful. It's a free market. Supplies will come. Either promoters will sell. If nothing else, promoters will sell.
IPOs.
Yeah, but real opportunity for the nation and for the regulators and the nation builders is that allow a lot of money to go from the stock market cap to the real economy.
Okay.
So 3, 4, 5 lakh crore must go into the markets and keep the market a little cool. So if the paper supply increases, one from the private equity funds, and second from unlisted new companies who want to come into the market. So how do we facilitate that? Or even government selling PSU stocks into the marketplace, or reducing the minimum size of the listing from 75 to 65%. So I mean, regulators know from where to get the papers, but I think in a very demanding kind of situation, India is already amongst the most expensive markets.
Right.
Only Japan is little above India. They are 26 times, we are 22 times.
Okay.
But that's the distinction we have of amongst the most expensive markets. So let's not go into more expensive zone. Try to keep the expensiveness here. And good thing is that we have good corporate earnings also in the next year coming in. So you have the DI buying, you have FI buying, you have good corporate earnings growth. So we have picture perfect.
Right now, sure.
Yeah. So this is an opportunity for the regulators to open the floodgates of the IPO markets and let the money go into the real economy, which will further bolster the economy itself.
I'm going to get on to the IPO markets in just a bit, but I first want to address the retail growth story, because we've seen a sharp uptick. Retail investors are mostly parked their money in F&O, and from that FY19 to, okay, let's just say if not completely in F&O, from FY19 to 23, there is a huge surge typically which has come through in the F&O market to an extent of 500%. 9 out of 10 traders in last 2 years or so, they've seen a lot of losses taking place in the F&O markets. Sure, demat accounts are going up, but at the same time, you also have this category where
Yes.
there are sharp losses being witnessed for the retail category. What is your advice for that? Do you think more education should come in for the retail category? You think more measures should come in, probably where the losses could be capped? How are you looking at it? Your perspective.
I mean, this is unprecedented. I've never seen anything like this. I mean, we are trading few $1 trillion per day. I mean, ADTO of the entire market is running into two and a half, $3 trillion per day, and it is still climbing at 25-30%. So because the number of people who are participating are very high, and market is trended. See, what happens is the losses are also less. See, basically they are underwriting or they are selling options, and in that they get the premium. That's how the participation is very high.
Right.
So, but then if the market is trended, all the premiums are income. But when the markets are choppy, then they start losing.
Exactly.
You know, so in this phase, they are likely to make money, and the whole situation, in fact, it will become bigger and bigger till some collapse happens. So, I think that is a necessary evil, and this is because of the technology, because of mobile trading, because of liquidity of the market, reliability of the market, settlement system, T+1 settlement system. So everything is so good, people will definitely, and this product is being accepted. So I would not find it completely out of place. I'm just surprised by the size of participation.
Exactly. Does
So,
that scare you at any given point of
At
time?
times it finds, are we into casino zone or something like that? But yes, I mean, for me, I have the old history of no kind of a speculation type. In fact, I don't speculate. I never trade in this thing. So one has to be careful how much you are speculating. Have you got your loss under control, or your whatever, your greed under control, rather I would say. When you're making money, don't pyramid it so much that in one loss you might lose out everything. So that is very important in speculation and all. But yeah, this is unusual time for me to say anything, because since I don't know the trade, what can I say?
So in the picture perfect story that we're building up, do you think there are 3 lessons that the retail investors should keep in mind because they go out and venture out there, because the optimism continues to build on, corporates continue to pose stable earnings growth thus far, Indian economy seems to be in a bright spot. What do you think would be 2-3 advice that you would give to our retail investors out there before they go out and venture into investing?
Yeah, so you have to choose your word properly. Retail investor.
Right.
Investor doesn't have any problem, because it is very difficult to lose money in Indian market, I can tell you this.
Right.
I mean, even the failed companies also have made money. I mean, you might make less money, but outright, if you buy 10, 12 companies, even by throwing dart, you'll make decent amount of money. Okay, because market is very trended. It has been growing at 12-13%. If you are, if you're investor type, you hold, even if you have bought at wrong price, you hold for 2-3 years. As a portfolio, you will definitely make money.
Right.
So it is very difficult to lose money in Indian market for investor. Speculators, the outcome can be quite dramatic. In the sense, you can make dramatic amount of money on a very small amount of capital if you are very good in trading, and you can, a lot of people, they lose money.
Right.
So it's a lot of fun, but you end up losing money at the end of the day.
Yeah.
So it is for you to figure out how much you want to lose, and you must control your greed, and don't pyramid. Take your winnings and convert into investments. And a lot of people, they ask me from where to start. Where to get the capital? Should we trade first and get the capital? I don't think that's the way. But if somebody is doing it, in that case, and if you are winning also in the market, then you must keep taking out money and keep buying stocks.
Okay.
Start investing. Don't put everything at the risk.
Okay. All right. Also a sense of bit caution, do you think? Are you sensing, because promoters technically are going out there through OFS and selling out some chunk, block deals perhaps? Does that worry you at all?
No, यदि आपका stock price is high, stocks will come from the sky, I'm telling you. Whether, it is for if the regulators don't supply the market with the IPOs, it will come from the blocks. And smart promoters, once they know that's a replacement of a company, say somebody's put up the project for 1,000 crores and the market is trading at 5,000 crores, he must sell 10%, 20% of that.
Yeah, exactly.
So that,
to capture the structure.
You capture the thing. So there is always a value and price.
Right.
Value, who knows value? The price knows, everybody knows the price, but nobody knows the value. At least the promoter has some sense at what price I can replace, what is the value of what he has. So the moment he sees that value is that 1,000 crore, the value is say 2,500 crores. But if you take it to 5,000 crores or 7,000 crores, he's definitely going to supply. Or if not him, his relatives will supply. His employees will supply. So there is enough supply, and it's a very efficient market, extremely well, I would say, informed holders are there. So it's not that, but then this is an opportunity for the government to supply the PSU stocks. Tap this opportunity to divest. This is a time to for a lot of unlisted companies to come into the market one way or other. It is for the regulators to make life easier. I mean, instead of clearing in 9 months, 3 months, 5 months, I think you should see to it that in 30 days flat, once the application comes, you should be able to clear it. So something like that. Even underwriting process, why they have to go and break the heads with a few mutual funds. If any broker or bank is willing to underwrite, please let them underwrite and start the issue, rather than waiting for 50-60% subscription coming from few institutional investors. So I think there can be a lot of reforms. I mean,
So those
and
are
I'm
two
quite
of them
sure.
that you've suggested.
Yeah, but I think measures must be taken to open up the floodgates of IPOs.
What apart from these two measures, one was the underwriting criteria, the second one that you suggested was the time period probably that could shorten it. Anything apart from that
My knowledge of issuance process is limited, and I mean there are global examples. Maybe they can learn few more things from American markets, how exactly their underwriting process works, how they can speed it up. Now it's completely digital. We are more digital than anywhere in the world, thanks to SEBI. So what I'm saying is that can they make it easier? I mean, they would know where exactly the pain point is, where exactly it is getting blocked. I'm just saying that supply more paper in the market because there is a demand.
Okay, so let's get on to the vision of Indian economy, the growth, which is probably the target of $10 trillion economy that we're looking at as a present of 3.75. What do you make out of it? When do you think we're going to hit that mark? How sustainable are we at that point of level? How far we can get on to that level? Please give me your 2 cents on that.
So one of the things, I have been in the market for 40 years. I have seen this economy going from maybe $100 billion to now $3,750 billion.
Right.
Okay, so I have seen this kid or this country growing in terms of size of the economy. We talk about thousands of planes being ordered by our aviation company. So these are very different scale now, and this is just a start of the scale. So I think when you talk about 7-8 years of doubling of the economy, say 8 years, in 2031 or something will be $8 trillion. It will happen, maybe a year here and there. It definitely happens. Some COVID kind of disruptions, and also it will get delayed by a year or two. The issue is that we overestimate what can happen in 2-3 years, and we underestimate what can happen in 8-10 years.
Right.
And this transformation happens. I have seen the IT industry growing. In 2000, the exports were just about 5 billion. And we appointed McKinsey and all, and they came out with a report. By 2010, will be $60 billion industry.
Right.
And it looked like, when you are at 5 billion, how do you visualize what is 60 billion?
Right.
Today, TCS alone is $29 billion. So, in the longer run, what happens, we underestimate.
Right.
And that is where the investor's patience comes. Because those things will happen, but you have to sit through. But then media and everybody tends to portray a picture that you can make very quick money in the stock market. No, it is all about the patience.
I don't think we can make
That is what I get a sense.
Easy fix.
No.